If you're thinking of buying your first home in 2024, then today's video is for you. It's an exciting journey, but there are some critical things that you need to know before you take the plunge. From navigating the latest market trends to understanding mortgage rules and finding hidden gems in your budget, I've got you covered. In today's video, I'm going to break down the essential tips and tricks for first home buyers. I'll cover understanding your finances, saving your deposit, getting pre-approved, and also what to look out for to avoid some costly mistakes, plus lots more. Make sure that you stick around until the end so that you don't miss any of these hot tips and tricks that you need to know in 2024 if you're buying your first home. As always, feel free to skip around the timestamps to save time. Let's get into it. The first thing that you need to do is understand your finances. Understanding your finances is a crucial first step for first home buyers. Having a good credit score helps and can impact your ability to get a mortgage with favorable terms. To improve your credit score, what you can do is focus on paying your bills on time every time, paying off any debt, and not taking on any new debt. I have a whole video all about how to raise your credit score, which I'll link up over here if you're interested. Another thing that you should do to understand your finances is make sure that you've got a realistic budget or intentional spending plan. If you don't have a intentional spending plan yet, I'll link a copy of my free one down in the description below. It's important that you understand where your money is firstly coming from and how much is coming in, and then also knowing exactly where your money is going. Something that you can look to do as part of your journey towards owning a home is in your intentional spending plan, start to add in some of those post-settlement home ownership costs. So your monthly mortgage payments, your home insurance, and also thinking about property rates. It's a good idea to get a bit of an idea of what these expenses are going to look like before you take the plunge and actually buy a house. If you add them into your budget and start living as if you're already paying those expenses, but instead putting that money into a savings account towards your deposit, this can really set you up for success in the future when you do buy a home and have a mortgage. By fully understanding your finances and planning accordingly, you're going to set yourself up for success in the future and on your home buying journey. The next tip is to save your deposit. Saving a deposit is a crucial step in the home buying journey. Typically, the deposits range from between 5% to 20% for an owner-occupied property. To reach this goal, practical saving strategies can really help. One thing that you can do is start by setting up a dedicated home deposit savings bank account. This can help you track your progress and also keep your savings separate from your everyday spending account. You can also look for ways to reduce your expenses and put these savings that you find towards your home deposit. Cutting back on takeout and dining out, cancelling any unused subscriptions can really go a long way to help you save your deposit. A good thing to do is set a target and then a deadline and then work backwards to figure out how much money you need to put away each month to reach your goal. Remember, the more deposit you have means the less money you need to borrow to complete your purchase, and this means the lower your monthly mortgage repayments are going to be. Putting in a bit of time and effort to build your savings up before you buy a house can really help you overall in the long run. I have a video all about how to save your deposit fast in 2024, which you might find helpful, and I'll link that up over here and down in the description for you. It has a few more of my hot tips and tricks that can help you accelerate your savings and get your deposit together quicker. The next tip is to make sure that you get pre-approved. Getting pre-approved offers lots of benefits and can make the process a lot smoother for you down the track. When you're pre-approved, you understand your budget and you can focus your search on houses that fall within your budget. It can also give you a little bit more time up your sleeve when making offers on contracts if you're already pre-approved. Sometimes you can reduce the days that you need to put down for your finance conditions, and this can be more favorable for the sellers of the property, especially if it's someone that's selling a property and needs a quick time frame and a quick sale. The process of getting pre-approved means submitting an application to a lender along with the supporting documentation. Lenders take all the information that is submitted for your pre-approval and then evaluate your financial situation. They then determine how much lending they're willing to lend to you and also the terms of the lending. By getting pre-approved, you can streamline your home buying process and negotiate more effectively. This can make your journey to home ownership smoother and more efficient. Along with getting pre-approved, my next tip is to make sure that you work with an experienced and qualified mortgage advisor. A good mortgage advisor can take all of the stress and pain out of the financial side of buying your first home. They're with you from the very start of your journey all the way until settlement and beyond. A good mortgage advisor is worth their weight in gold. They're generally across all of the different lenders' policies and offerings and can make sure that you are taking out your mortgage with the right lender for your individual situation and circumstances. They arrange all of your application and submit it through to the lenders on your behalf to get your finance pre-approved. They will then help you work through any of the conditions that need to be met. They can refer you to professionals that can help you, such as good lawyers or building inspectors, to complete building reports. When the time comes, they can negotiate interest rates and cashback on your behalf. The best part is, depending on the lender, most advisors are paid by the lender for arranging the lending on your behalf, so don't generally charge you a fee. This does tend to vary a little bit between advisors, so make sure you check with your one to understand if there are any fees that need to be charged. And not all lenders pay advisors, so sometimes advisors will charge you a fee. Before you sign on with an advisor and go further with your application, make sure you understand upfront any costs or fees that you may incur. If you don't have a good mortgage advisor on your side yet, feel free to get in touch, as I would love to help you. My details can be found down in the description box below. My next tip is to make sure that you understand the housing market. In March this year, house prices went down a bit, and in some places they're still down around 20% from their highest point. When you consider inflation, they're down around 35%. There's a bit more activity in the market now, but things are still currently moving slowly. This is mainly because a lot of houses have all come up for sale at once. Sellers were waiting for prices to stop dropping, but now they've just decided to sell. There are lots of buyers around at the moment too, but they're not in a hurry because they have lots of choices. Higher interest rates at the moment mean that some buyers can't borrow as much as they previously could have, and this means that they're not quite meeting some of the sellers' expectations on price. Some sellers do need to sell quickly and might lower their price accordingly. If more people lose their jobs, then more sellers might do this. This can cause prices to drop further. Sellers who don't need to sell right away might take their house off the market and wait for prices to come back up again. If many sellers do this, then that means there'll be fewer houses for sale. This could help stop prices from falling even more. In this context, I think it's important to make sure that you stay informed on market trends. Some things to keep an eye on are price fluctuations and also inventory levels. Additionally, I think researching different neighborhoods is vital. By being well informed and strategic in your approach, you'll be well equipped to buy a home that is right for you in a market that is continually evolving. The next tip is to work with a real estate agent, specifically a buyer's agent. Working with a real estate agent can make your home buying journey so much easier. To find a good real estate agent, you could start by asking your friends and family for any recommendations. You can also look online and read any reviews about agents. You could interview a few agents and see who knows the local market well and who you feel most comfortable working with moving forward. There are many benefits to having a professional on your side. A good real estate agent can help you find a home that meets your needs, help you negotiate on price, and also help you with filling out the paperwork as required. They tend to understand the market trends and can provide you with some valuable insight. They can help save you time and help you to make informed decisions. With their expertise, you'll have a smoother and much more successful home buying journey. So these are a few of my hot tips for first home buyers in 2024. If you found this video helpful, don't forget to like and subscribe. And if you have any other hot tips that you'd like to share with other first home buyers, please leave these down in the comments for everybody. Another video that you might like to check out is the deposit requirements for 2024, which will be coming up next. Thank you so much for watching, and I'll see you in the next one.